Bueno, entonces vamos a pedir por favor yo quiero presentar a Ruphert Edwards, que es un especialista en finanzas de carbono. Ha trabajado por ejemplo, para Climate Change Capital, entiendo que es así, is right. Pues ha sido invitado, es asesor permanente de iniciativas promovidas por Banco Mundial, por Naciones Unidas, por el gobierno de Estados Unidos, por el gobierno del Reino Unido en estos temas de finanzas y de finanzas de carbono. Y ahora nos va a hablar un poco del tema de riesgos y garantías. Sin embargo, tal vez, por favor, Ruphert, quiero pedirte un minuto, que Franz, antes de que inicies, quiere dirigir unas palabras a ustedes.
I'm very sorry, this is very interrupting, but I have a plane to catch. Ruphert, I'm gonna be missing your presentation, which I'm sure is gonna be wonderful. Like all the rest, I just wanted to thank IDB and UN Red and FCMC for co-sponsoring this, and ask all of you to think about what we're gonna do in the next workshop, which is a continuation of this in Panama in a month from now. All the country participants. This workshop is for you guys, and quisiera pedirle a los países que el tema de la próxima negociación, de la próxima workshop, del próximo taller, es precisamente cuáles son los puntos que pueden estar en discusión en las negociaciones en Lima relativas a RED y que pueden tener un impacto en RED. Y vamos a tener una discusión, una presentación de cuáles son esos puntos y cuál podría ser el impacto. Igualmente, y dentro de esos puntos que pueden, de resolución o de que se van a discutir, está el tema del Fondo Verde, que también, Fondo del Clima, que también podría tener algún impacto. Entonces, lo único, mi co-sponsor del programa, Marco, va a cerrar y va a pedir un poco de reflexiones sobre este taller, y asimismo les sugiero que por favor, si tienen y quieren agregar algunos otros puntos que podrían ser interesantes para la segunda taller, agradecemos mucho el insumo, que me lo hagan llegar a mí o a Mario Escobedo para coordinar con Terry, con el resto de los participantes, algunos puntos que podríamos tomar en cuenta. Quizá usando palabras legales vamos a hacer un esfuerzo razonable para tomar todos estos puntos de vista para la próxima ¿cómo se llama? Taller, que ya está muy avanzada la agenda, pero que todavía tenemos alguna flexibilidad. Muchas gracias y disculpen la interrupción, sobre todo a vos, Ruphert. I'm very, very sorry for the interruption.
Well, let's see if I can keep you awake as we come to the end of our 2 days together when everyone's starting to feel a bit jaded. Can you hear me okay? And I'm not a lawyer, so I will probably not talk for a very long time. And hopefully it'll only take about 15 minutes. So well, thank you anyway for inviting me to what I think has been a very interesting couple of days. And hopefully what I'm going to talk about will be relevant to what we've already discussed and build on what's already been said. And we've heard already of the significant efforts that are being made by some Central and South American countries, including Guatemala, in terms of RED+. And we've also heard a lot of discussion about the importance of payments for results, whether from Germany or Norway or the Carbon Fund, how that is an important part of, a critical part of the Warsaw Framework and built into the governing instrument of the Green Climate Fund. And I think that is going to be very important for us all going forward, because the carbon market is simply too small to do all the things that we want it to do. We've also heard about different kinds of investors and investment structures. So what I'm going to do now is a bit more specific, and I'm just going to focus on one type of investment structure and how governments might utilize green bonds to address the big challenge of how we source sufficient upfront capital to address the the ex-ante and the ongoing financing needs of national RED Plus plans, because payments for results are very helpful. They create revenue lines, but they're not a source of upfront capital, and fiscal resources are going to be needed today in order to make the investments that are required to make those RED Plus outcomes actually happen. I'm not going to talk a lot about political risk insurance and guarantees, partly because I thought somebody else was going to be doing that this afternoon, but I will touch on that issue because it's very relevant. So I want to build on the performance-based payment discussion and show how those commitments could help tropical forest countries to potentially source finance from the capital markets at very low cost and shift the economics of a more sustainable development model in terms of having a competitive advantage over business as usual. And so upfront capital is going to be very important to help the policy tools in national RED Plus plans and to create a flow of funds down to the regions that can then support local level public-private partnerships and drive further private investment at a local level and change business operating models and shift agricultural supply chains onto a more sustainable path. And so as Leslie said, everyone's talking about green bonds. It's very trendy. It's a big item on the agenda of Ban Ki-moon's climate summit in New York on Tuesday. And the background for the focus by policymakers on green bonds is that whether you are in the advanced economies or developing countries or forest governments, all these governments are facing fiscal constraints and conflicting spending priorities. And so it's a major global policy goal to find ways of using limited public funds to leverage large-scale private investment from the capital markets and the big institutional investors, the pension funds and the sovereign wealth funds, because of the massive financing requirements in trillions of dollars over the next couple of decades globally for low-carbon energy and sustainable food production. And capital markets, especially as Leslie said, especially the bond markets, is where most of the world's money is sitting, unless it's under a mattress in China. And so when we're thinking about the hundreds of millions of dollars that are required over 10 or 15, 20 years to make national RED Plus plans work, necessarily I think we have to address how we're going to access finance from the bond markets. The good news is that mainstream institutional investors are becoming increasingly interested in green bonds. I think the issuance volume to date of bonds explicitly labeled as green is something like $20 billion now, and that's forecast to grow. The bulk of that is coming from AAA credit-rated institutions like the World Bank or the European Investment Bank, some big corporates, and it's focused on the energy sector. And an issue to bear in mind is that institutional investors are big, but they're also pretty simple folks, and they like simple structures. And the universe of specialist investors is a very small universe of specialist investors that are going to take the trouble to understand specific fund vehicles where their returns are going to come from projected forest or agriculture revenues, especially outside countries that they know well. And so there's a challenge for us in designing investment structures that can provide the big investors with investment-grade bonds. And these investors generally want green bonds to yield as much as and to be no riskier than normal bonds. So the most efficient approach when thinking about bonds is to have government guarantees, as with normal treasury bonds or sovereign bonds. So how can we make this relevant for tropical forest countries? Well, we can use financing instruments that link the capital markets and this emerging and growing trend for payment for results to subsidize the interest costs on large-scale bond issues and still provide investors with the yield and risk characteristics that they're used to seeing. And I think if we can set aside the proceeds from a bond issue for national RED Plus plans to support low emission development, that will encourage the donor governments to scale up their commitments of payments for results. And those same donor governments are very keen to find structures that will involve the big pension funds and sovereign wealth funds in climate finance. So it's worth trying to tap into that, I think, for people in this audience. And investors, as I said, would receive principal and interest payments from tropical forest governments as they would in a normal bond, but for those governments, the costs of the borrowing would be subsidized by the carbon revenue streams. And I've got a couple of slides that hopefully will illustrate this relatively simply. These are the cash flows on a normal, traditional, simple bond structure of the kinds that all governments issue kind of every month. And if I can get this to work, this is what the cash flows should look like after the REDD Plus payments have been made. So many Latin American countries have investment-grade credit ratings, which means that investors, international investors, can and actually do have some of their bonds in their portfolios. And those countries may typically have recent long-term US dollar borrowing rates of somewhere between 4 and 7%. And the idea with the approach we're suggesting through green bonds is that it can allow those countries to invest in sustainable agriculture and conservation and REDD Plus outcomes at a much lower cost of capital to the government budget. And I should say that, as I think Leslie hinted at this, and so did Franca, that for low-income countries with weak credit ratings, it will be necessary for an institution like the Multilateral Investment Guarantee Agency of the World Bank to provide an additional degree of support to give investors comfort that they have an investment-grade bond structure, and that can take the form either of partial risk guarantees or political risk insurance. And those agencies are used to doing that as part of development finance operations. So what I've tried to do with this slide is, it's purely illustrative, is show the implied net interest rates to the country of issuing a bond structure like this for different scenarios for emission reduction outcomes and bond issuance sizes. So just for example, it might be possible to capitalize a national REDD Plus plan with $400 million and achieving emission reduction targets of 75 million tons over 10 years would imply a negative net interest rate of 3.88%. And I've assumed here that normal kind of bond issuance, current interest rates of 5.5% and a $5 per ton REDD Plus payment over 10 years. So in other words, the REDD Plus payments are sufficient not only to offset all the interest costs on the borrowing program, but also allow for some of the principal to be repaid as well. And then I'm not going to, don't worry, I'm not going to go into this slide in too much detail. I think the point I simply wanted to make was that an issue like this could give governments access to capital that could pay for direct costs, such as conservation or incentives to private actors, but could also allow for investment that would itself generate a return for the government, such as supporting the agricultural sector, investing in processing facilities, providing concessional loans to farmers for more sustainable activities. And the returns on those investments, given that they're coming from capital that's sourced at a very low interest rate, should generate longer-term funding for the country's sustainable development. And I should add that these numbers are purely illustrative. Obviously, countries would be able to manage their budgets based on projected emission reductions and financing needs and conservative assumptions. $5, as we know, seems to be the price that performance-based payments from international funds are using at the moment, but there's no reason why that shouldn't change depending on economic circumstances and negotiations. So in other words, these variables, this is an approach, and the variables could simply be shifted around to make the economics work and make all the different stakeholders aligned. So this is quite a busy slide, and I don't know how easy it is for you to see it, but all I wanted to try and do here was show how this approach could support national REDD+ plans and support the Warsaw Framework and create, if you like, a theory of change, get over this chicken and egg situation of what comes first, the capital or the results, create a flow of funds from where most of the money in the world is sitting, the capital markets, and REDD+ payments, down to national governments, down to regional governments, and from there support investment in conservation, generating risk reduction mechanisms for the private sector with local agricultural finance institutions, and direct investment in growing, in agricultural intensification, for example. And at the bottom of the slide, I just wanted to try and make the point that investing in agriculture and developing commodity supply chains while achieving REDD+ outcomes could enable regions and countries to tap into the growing demand for sustainably produced commodities. And it's helpful that the MRV, the monitoring and reporting and verification requirements for the REDD+ payments from the Carbon Fund and the other international institutions could help to define regions and jurisdictions and countries in the eyes of the global commodity markets as countries of low or zero net deforestation supply, and therefore leverage further investment from the private sector. So, final slide. I told you I wouldn't be too lengthy. So what I'm describing, a green REDD+ bond is simply a mechanism that supports an approach, an integrated approach that could hopefully help bring together ministries, tropical forest governments and international donors, and private investors. There may not be a need specifically to label a country's budget allocations and fiscal commitments as being green, and you could take an approach like this and simply deconstruct it into its constituent parts with international funds making REDD+ payments over a number of years, and tropical forest country governments borrowing and investing as they normally do. But we do know that to achieve the goals we want to achieve is going to require a much bigger quantity of both domestic and international public resources and a much bigger quantity of private finance. And so there may be advantages in using a specifically green bond mechanisms. And I think the reasons for that are, I think those countries that are being asked to make pay for performance commitments, and I've spoken to a number of them, are very keen to create an alignment of interests between themselves, forest countries and investors. And I think we'd like to see in forest countries taking on the liabilities of repaying bond investors and setting aside funds for REDD+ plans. Those same donors are very keen to get institutional investors involved in climate finance. At the same time, forest country governments are already committing fiscal resources to REDD+, and in many cases, I think probably not sufficiently well advertising what they're already doing, and I think it would be helpful to package up both the existing and the future commitments so that the international community can see just how much work is already being done. I think that the global, I cannot emphasize enough how in Brussels, for example, the European Commission is focused on this issue of sustainable commodity supply chains and the extent to which European food imports are creating deforestation. It is a very, very important issue for them. And I think, and there will be legislation that will affect commodity buyers. And so I think those countries, so I think commodity buyers and supply chain actors are going to be interested in investing in those regions where they can see a real commitment to to RED Plus outcomes and a low emission development model. I think investors want to invest in bonds that have normal risks and return characteristics, but where the proceeds are clearly being used for a defined environmental outcome. And I think going forward, we may see more incentives for investors to go into green bonds, tax incentives and partial risk guarantees. And I think that could be very important for finance ministries in tropical forest countries, because those investors, there's going to be more demand for those bonds. They're going to be more tightly held. Big insurance companies like Zurich Insurance, that has a portfolio of Latin American bonds, is very keen to have an increased asset allocation to green bonds. So that should mean lower debt costs for countries as well. So in summary, I think a green RED Plus bond, or the approach that I'm implying, could help to source large-scale private capital today by making a link between these government-to-government payment for results structures, and do so in a way that, at a very macro level, at the level of government budgets, transforms the costs of capital for countries to invest in natural infrastructure and low emission development and the green economy, and make the economics of doing so at least as attractive as investing in business as usual and ports and roads and fossil fuel subsidies, and give economists and finance ministries the sense that this isn't a cost or a trade-off, but is a genuine green growth and development opportunity. Gracias.
Gracias, Ruphert. Ahora sí creo que vamos a abrir una ronda rápida de preguntas para Ruphert y para Thiago. ¿Tenías anotada ya la pregunta que te habían hecho?
So on the issue of the English law, I guess there are potentially better laws to be used. It always depends on the parties that are negotiating. The thing what happens with the choice of English law is that when the first ERPAs were created, they were created within a market that was essentially a buyer's market, was a forum essentially by companies interested in buying those assets, and they started disseminating that ERPA very well. And that was propagated and started to being used, and that became the standard. But if you think, for instance, in situations where you have potential buyer in Germany or in France buying emission reductions from a project developer or from a government in a civil law-based country, such as most of the Latin American countries, that the potentially most ideal solution would be to find one of those laws to rule the agreement, because they're very similar in many ways. And the fact that the English law is a common law system is a foreign system for both of them. So they have, of course, English law has its deficiencies for some of the things, and the ERPAs have been designed. So all those expressions I was saying about best efforts, reasonable efforts, those are things that are applicable to English law, essentially. And they are not so much an issue for German law, for Brazilian law, or for, say, Argentinian law, Chilean law, for instance. So, but that became the standard, and that's where the buyers sort of dominated the whole process. Although, sellers became more sophisticated, they understood the process, they had good lawyers as well, and they managed to make the whole thing more balanced. So the call option, you're right, this call option and put option that I mentioned here are a bit different from the ones you see traded in exchange, where you have an underlying asset, which is the principal, and then you have the contracts being traded back and forth as a function of the price of this underlying asset. This is a hybrid instrument, and it has features of a call option and features of a put option, in the sense that the buyer is allowed to buy the credit should it want to do so, and the seller also, if he wants to let's say to sell a put option, for instance, to another buyer, then it's able to actually use that as a hedge. We'll have a strike price, but it will keep the same, a more traditional structure, where at the end you're not really changing or exchanging resources or money, but you're actually, delivering the credit, delivering the actual underlying asset. And I'm not sure, I recall now your third question, sorry.
The question was just about using cost plus pricing as the basis for setting up a pricing strategy, because there are other mechanisms, not that cost plus is a bad one, because at least you know what it's cost you. But in a lot of situations I've been involved in where you've got a competitive market, you can't just go and purely apply a cost plus basis and say, well, it cost me $10 to create a credit. I need to sell it for $10, and sometimes you need to take a portfolio approach and accept the fact that you make a loss on some credits, make a profit on others, and particularly in an oversupplied market situation, you may well have to expect that on some transactions you're not going to be profitable, and so you need to take more of a sort of a holistic portfolio approach to it. And then there's other ways of pricing these things, by perhaps looking at opportunity cost as opposed to pure costs. So I just thought there were different ways of looking at this that may be more useful in certain circumstances or conditions than just purely cost plus.
Yeah, no, I totally agree with you. When I put that there, I think it's an important information that the government should have about how much is spending with it, but certainly not at the principle or the key method of evaluating how much your RED plus emission reduction will cost at the end. I agree.